Here we are on the Friday video, and we've got a 3-for-1 in today's video. We're looking at the top 30 momentum companies over the last quarter, the normal launchpad ones, which are the momentum in the last week. Plus, Gary's also added in something that he's seen pop up a lot in this week's lists. He's seen a lot of cup and handles show up. Plus, last week we got heaps of questions on the B-Wave. So 3-for-1 in this week's video, a lot to cover on Gary's side. And we're going to look at this list that is shared with Gary on a Thursday afternoon. That's the same time the list is shared with the YouTube members, and they get to see the list and put through their requests so that they can see the charts that they want to see on the list discussed in more detail. If you want to join, just click on below, go to the YouTube homepage, and you can become a member as well. Thank you for those who have supported us so far. Now, we say good morning to Gary Glover from Novus Capital. How are you?
Doing great, Chris. Yeah, no, we are. It's actually a really interesting list, actually. So there's some great lessons there, some great learnings. We'll cover the B-Wave there, try and explain that. Yeah, so yeah, it should be pretty interesting, actually. So, let's get into it.
Well, looking at the list, we start off with the 30 best momentum companies. And just to clarify, this is over the quarter. We use that in Australia and on the ASX because we have so many mining companies. And the majority of the world looks at the annual RSI. But in Australia, particularly with commodities or commodities across the world, you can have 2 or 3 runs within a year where they run the same commodity runs hot, cold, hot, cold. So that's why we use the quarterly. And when you scroll through the list this week, Gary, did anything come out or stand out to you as a dominating theme in these top momentum companies?
Yeah, I mean, it's the quality momentum there's still got a bit of a mix there, but I noticed that the launchpad and just what was sort of showing that maybe the shorter term strength was definitely pretty heavily commodity based, so metals based as well. So seeing like a lot of movement there, which is kind of sounds funny. Kind of been waiting this sector to liven up here with what's happening there, but yeah, it's taken a little while to actually sort of get some traction there. So I think that's really interesting. So I sort of think this is potentially could be a big shift in the market, but it hasn't really sort of popped its head up really until maybe this last week here. So I think that's, I mean, obviously we had gold running pretty hot, so we've still got some gold stocks on that list. There are not too many in the 30 here, but yeah, it's definitely a bit of a mixed suite in there. Some metals in there, but lots of medical still. That was obviously pretty strong the last few weeks was medical based, but definitely starting to see metals start to pop up here, start to filter through. So it's a sector there that I'm watching pretty closely there.
Well, as you mentioned, that top 30, that's definitely the list that we share with readers, of your members, I should say. You also get insights on the top 200 momentum companies on the ASX, and obviously that's what you're looking at beyond the top 30. To give more clarity to that list that Gary's talking about, of the top 200, 68 of them are mining shares, 44 of them are gold explorers, 18 of them are gold producers, 41 of them are Western Australian miners. And then inside of that second tier theme that you're talking about with the healthcare side of things, we do still see biotechnology and drugs ranking fairly strongly. And we do see sort of a bit further down, we've got physical patient interaction. And then also some of the insurers are still in that list. So interesting to see that that's still showing up. But when you delve into the top 30, you've got a whole list of companies there. And you did mention to me there are some great setups in this week's 30-30 list. So what's caught your eye first on the momentum list?
Yeah, look, number 2 there, AQD. I mean, it's a smaller price sort of share there, but so it's sort of hard to trade those sort of 2, 4, 6 cent sort of stocks there. But the only thing I'll say here is you had those 3 days up there, and then we pulled back there. So you got 1 day of selling there, but then pulled back 3 days, a 4th day, and the whole thing lightened up. So you got a little bit of a high type flag in here for it's on that sort of day there. So I do look for this sort of explosive 3 day, and then like I look for a little bull flag, like the same sort of like maybe 1, 2, 3 days there. And it's kind of one of the trade setups that I do look at actually. So yeah, this sort of the price is too low for me, but this is the sort of setup that I do look for. So it has come out of here, obviously some pretty good volume as well. So it can be when you see those explosive moves and then a contraction there. The thing I look for equal days. So I look for what I call like a 1-for-1 in time. So if this has rallied 3 days, I'm looking for a 3-day pullback. If it's rallied 5 days, I'm waiting for a 5-day pullback. And I want to see big volume, so double the average volume, and I want to see a contraction, less than half of the rally. So just looking for that sort of character, and that's the sort of setup side I do like to see. So just even though this is a small one now, when I met Mark filters in terms of trading, the setup itself is a good setup there, and a bit like the sort of the EPs there. I think if you allow yourself maybe like a 1% sort of stop on the pullback and the low of on the days, that gives you a little bit of room there, because this one here ends up having a 3 up and then 4 down, but it really only goes a tiny bit further on the 4th day. Oftentimes if it's just say it goes up 5 days and pulls back 5 days, sometimes the 5th day can start in the range and it can actually break out on the 5th day, or if it's 4 and 4, it might come in and then break out of the range. So you're sort of drilling in here. You're looking for, you're looking for a highly broken net. So almost like it's not really a B-Wave, but I'm looking for a high there. So I'll explain the B-Wave later on, but technically the B-Wave is not the right pronunciation, the right, there's some holes in that, the way that I describe it, but I'm really looking for a high to be broken there. And for simplicity terms, I label it the B-Wave for me personally, but I'll explain that detail later on. So hopefully that'll crystallize there. A1 AII here was another one that's pretty interesting as well. We did speak about this last week, Chris. It was probably pretty gappy here, pretty light on there. It's funny, I tried to actually, because this chart's gone pretty crazy there. I went back and looked through the notifications and stuff there, and it's like, it was pretty light in detail what was going on here. There was just, apart from sort of the South Korean, because this is sort of an asset which is sort of just, got some ties there with sort of South Korea around its metals and stuff there. There wasn't too much coming out. So obviously, insiders sort of know what this means for the company there. So, but you see that volume there, look at that big volume there. So, but tough to buy this one here. It's a gappy sort of stock here, but you did see that little contraction there, little cup and handle, you might sort of say, and then come through the handle there. But that volume there is pretty, you got a impressive volume here, sort of in a sort of, and then, some sort of, not so much a deal getting announced, just sort of an offtake agreement on South Korea, and then you saw the volume coming in here. Like, well, once that's pierced there, it's just going to keep going here. I mean, that they say here, obviously these couple of hands VCP, so you sort of, you get a 1, 2, 3 jump, sell some of the heat, and then just backstop the rest, and then just see where this thing goes. So most of us want to trade out of this. Like, in the past, if I was up 30, 40%, I'd probably just trade the whole lot out. We're starting to realize you just don't know how far it's going to go. So if you trade some of it out, move the stop to even, and then just sort of trying it out. And then look, maybe if you start getting something like that is the highest volume there, big volume day up here, that can be sometimes like a silent exhaustion then. So you might be tempted to take some more off, but if you're trying to sort of follow, using a moving average there or something, might be, because you just don't know how far these things go. That's the one thing I'm learning when I do my reviews later on, sort of post analysis. Some of the stocks I'm in there, like, geez, look at that thing. You thought you would, you're happy with it.
I did well on that. That's
How the thing just kept going, So sometimes leaving a bit on there, if you listen to Kalamagi all the time, he's this thing's gone up 100%. It's, I'll take some off, and his followers are all laughing because, his rules say you should wait till the 10-day moving average breaks down. So every time he takes it off, it's almost guaranteed to go higher. So, but that's what often happens with these sort of stronger stocks here. So, you just don't know how far they can go. What have we got there? MVP. This is one here, not, this has sort of come out of the blocks here. Bit of a deep pullback there, not really a great signal, apart from maybe, maybe sort of breaking above a swing high there. But yeah, not a lot of analysis there, but pretty powerful move here. Had a couple down days here, pull back, but yeah, hard one to trade there. Not an easy sort of setup there. And I thought this is one we sort of spoke about recently. There was a little tightening there, a bit of a VCP prior to this. It doesn't harder to see here now because of the jump and the contraction in the chart there, but it did come out here. But it's had a pullback there and had a little VCP in here again, and has gone through here. So, but yeah, didn't get too much volume in the first day. Okay, volume the second day, but you're having a reaction today there. So, yeah, I probably, me personally, something like that, I just wouldn't want to see it break the daily swing high. So, I don't like to lose much here, but I want to try and give it room as well. So, if it came out of here like this, just say you'd brought this little break here, 31s, what's this? That's the breaking 31s. So say you paid 31.5 or 32 cents. And the next day is pretty strongly. If they're 31 to 37, I'd probably have my stop in at say 29.5 would be the furthest I'd be. I might even be just underneath this high, maybe 30.5 there. I just wouldn't, if you get a move like the pop like that, that's a good sign there. But you just don't want to go home, a loser. Like I don't mind losing a cent or two, losing a small amount of money. But you got to give it some room, but not too much room either. But the name of the game is to keep those losses small and the wins big there. So that's how I look at it. FGR, another high tight flag. This is actually quite a good one there, Chris. It's come out here, had a few days up here. That looked a bit exhausting there with that volume there. See how that's sort of the heaviest volume day there. So you think, this might exhausted the move here, but then you go through a little pullback there, sort of like a little A, B, C in here. And if you look at that through that period there, when the 1 day up out of that, out of 7 or 8 days is the only day volume comes in. 1 day selling here, big range as well. So it does get going up. So obviously some buying in there. But then 1, 2, 3, 4, so there's 4 days down again for you in terms of your A, B, your C leg down. That's pretty light volume in there. So this thing tightens up here and goes. That's like a nice little high tight flag in there. Does have your little Elliott wave, your little A, B, C, which I love to see. I'll try and cover that detail a bit further on. But I think that looks quite good. Still had some pretty good volume there so far, so it still looks pretty tidy. So maybe this can stand a bit further here. So, but too small for me. But do like the setup. It's a really good setup here. RZI is a really interesting chart here. I think we had this VCP in this section here. So again, if I zoomed out of this chart there, like if I just went looked at this period up to here, you can sort of see this is a nice rally here. The whole thing's tightened up here. Then it starts to come through it. So then this day here doesn't break out there, but it does give us a little tell. The tell is the volume, so pretty good volume there. So the whole thing's tightened up here, starting to proceed. This is probably the lower high here. This is what I refer to my little B-Wave. But this could be a little congestion there. Breaking above that might be, a point of reference as well here. But yeah, but since then we've actually gone on with it. Interesting with this chart is it's sort of gone up once, pulled back twice, pulled back, gone up 3 times there. So you've actually got like a rising wedge in there. Now the Bulkowski there, if you look at rising wedges, sometimes those sort of, wedging patterns there, they can go up into that top and that can be a bit of a peak. And I think 3/4 of those crisps will break down. But how do you know if you're not, not going to be you're not going to be the one that accelerates there? Because this, if you think about it, that pullback is, that's what, roughly 10, 11 cents. This pullback here is roughly, say, 8 cents. This pullback in here is about 4 cents. So it's actually done a VCP. So pullback shorter.
It's just hard to see because it's in that rising wedge, and it's
Yeah,
quite
that's right. Yeah. If we take this back into here, we're thinking, oh, this is, it's got a bit of a rising wedge there, could, roll off there. But if you analyze that really closely, and this is the thing you've got to look at in detail is the volume. That's why anyone who says they don't worry about volume, I think they got rocks in their head personally, because volume tells you so much here. So volume tell you this is a pretty strong breakout, and then look at this pullback here. Pullback here, no selling. Okay, and then it pops again, and then that volume again. We want to see the spike on heavy volume. That's what sort of, if you read Wyckoff theory, talks about expanding higher on that, seeing those big volume bars. That's signs of accumulation. That's sign of big money. Trying not to be left behind. And then it pulls back again. So you get the 1 day selling here, and then that's it. All these next 3 or 4 days here, no selling here at all. Just the whole thing just dries up there. And then we start to see buying again. So so far it's just sort of showing here. It's coming through there. And even this day here, 3 days up, get 1 day there, and then the next day it's already turning up here and turning up again. And even this inside day is pretty tight here. That's still losing a pretty. So even though this is a rising wedge, it looks a little extended there. There's absolutely been no selling going on there, but 1 day of selling. On the rest, it's just been accumulation. And then the whole thing pops out here. So coming out here, if you saw this, once you sort of close above this range here, so even if you wait till what's that 67.5 there, you bought this at 68 cents. I mean, it's gone through to 85 cents here. So even just wait for that break here to buy that range. And look at that volume for that day. The volume was pretty strong. So if you bought this at 68, finished at 70 on pretty good volume, you're pretty confident that this is going to go on here. So, you can use that bar as your stop there. If you want to be pretty tight under 65, so put it at 64.5, 64, then use that bit of room. Or maybe use a moving average depending on what your system is. But that's a really good, interesting chart there, because it's sort of like, there's a few different, you've got your staying in the top half, which is important. Obviously VCP, sort of cup and handle, sort of breaking through. Some good volume there. Volume analysis is pretty decent. We do have a nice move here, but so it looks a little extended here, almost like a rising wedge, which is 3/4 of those. Sorry, 3/4 like you break down, but doesn't sort of show any signs. So that's why sort of some of these technical patterns, like I've read Bukowski Encyclopedia charts, but you sort of got to look at what the volume is sort of telling us as well. So,
Right, Bukowski and Wyckoff at the same time, as well. Mark Minervini overlay the individual pattern.
yeah,
With the 3 together, you can get a good filter.
yeah, no, that's right. Because I know at the moment, like, I know, I'll call that. I know sort of one of the traders I know was mentioning Temple and Webster there. So it actually sort of reports soon here, but this is similar. It's sort of like the whole thing is congesting there. So it's pull back, getting short. So it's been going. So it does look a bit extended on the daily there. It is a rising wedge on the weekly as well. So it's got some risk there. If you draw those sort of trend lines there, the whole thing's sort of tightening up. So some risk here, but it is reporting here in about a week's time. So it has typically reported pretty well, Temple and Webster. I think some of the other retailers are, they've been mixed there. Some have reported pretty strong, some a bit negative. So, but yeah, it's an interesting setup here. Just, that's why some can break out, even though the odds, that pattern there does suggest, maybe the odds are sort of down here. You do get this sort of setup there. So you just have to sort of go and analyze it there. But to me, I would sort of view that as a bit too hard to trade, because we'll just get a report coming out, what's that going to throw up here? So, that's the hard one for me. PDI, thought this was interesting there. Just we got a bit of a cup and handle here, Chris, as well. So it's showing a bit of strength. It's a bit smaller name here, but see this sort of starting to come out here, and starting to sort of congest there. So you got a little bit of a cup in here and a handle, and look at that day there, really comes out. That's a pretty strong, that's a break here as well. So basically you've got probably 52-week high, and coming through, VCP Cup and Handle as well.
2-week high and an episodic pivot
Yeah.
in one.
Yes, you got it all going on there, and got volume at the moment as well. So even as a smaller name, man, so that's actually not a bad break here. So yeah, this is done all right. So it's hard there. Not many people are sort of comfortable buying new highs there, but they're often the ones we look at there. OCC, actually, well, this one, if you bought the brand new high down here, or even down here, or even here, you'd be doing pretty well. So these stronger names, they go all right there. So, but this Orthocell there, it's in the same area as Mesoblast, and I think there's another stock, CYP actually is on the list as well, Chris, as well. So they're all in that sort of stem cell area. So you can see how that one positive FDA approval for Mesoblast has really lit up the sector. So this is why that sort of sector, sort of, sister companies and sector strength is so important. So I'm really sort of making sure, like, that's sort of something I've just pretty much got into every trade now. Like, bar one of my trade setups there, sector strength is something that we must sort of see here. So it's almost like a non-negotiable now. But this has had a pretty good move here. I mean, look, this looked like it was almost like a bit of a shooting star here, a big reversal there. And it had a couple of down days as well, pretty heavy, bit of selling there. But then it's bounced back here, some pretty decent days, and then congested. And then, so that probably looked a bit negative to me there. It's two big heavy down days, some heavy selling as well here, but the volume was staying pretty firm as well. The volume's still plenty of buyers coming in here. And then you end up getting a little B-Wave break. And so you don't know. We don't know how far these breaks are going to take us there. All we know is the pros will take that trigger, that tightening out, a little break. They'll sell some into like a 3-day rally. So if it goes up maybe 2 to 3 times their risk. So what I mean by risk is if they're risking, say they break this, so they're buying here at say 138.5 or say 139, and maybe what's their stop here? 128, something like that. So just say they got like they buy this at 139, they put like 11-cent stop on it. If they get 2 times that 11 cents, they might take half off, and then they might backstop to even there. So what that does is you've now sort of you've locked in 2 units of your risk. So just say you're risking $2,000 on every trade. That's your maximum risk there. If you get 2 units of profit, you've made $4,000. You lock in half of that, so you lock in the $2,000 profit, and you move the rest to break even there. So you've essentially sort of if you get if you lock in you lock in 2 units of that, you basically lock in $4,000. Sorry, not 2. You'd lock in $4,000 profit, and you'd move up to break even. So worst case scenario, you're taking home at least 1 times your risk.
Helps their averages rather than having break evens or minus ones. It really are some average in the year.
Yeah, because you sort of like, I know, sort of like I've sort of been watching a little bit of that Jack Casellas there, and he does a sort of similar thing there. You might look at maybe taking some profit off sort of 2 to 2.5 times his risk, take half it off, and look, all the pros are doing some variation of this. Whereas they might take off a quarter, or might take off a third, might take off a half. Taking off some into that heat, and then trying to get themselves to break even reasonably quickly. So there's no risk on the table there. But me, I sort of thought about this. I thought, if I get to say 2 units of profit on my risk, then I've locked that 2 units in, and I've got break even. Then I've sort of I'm making a profit on every trade if I do that, and then the rest let the other half run and stuff there. And the only variation for me is if it's a weak market, I'll definitely take 50% off. If we're coming out of like maybe a deep low, I think this is the start of a big move, and we're seeing big volume, and then things winding up, and maybe I'll take a third off or something like that. That's the only variable for me. Is not the sort of process. It's maybe the weighting stuff there, but that's the way to do it, because what that does is just keeps the account ticking over. So Because if you get through a bit of a messier phasing, you sort of see Benny do this. He's still taking VCPs the whole time, but he'll just tighten up the parameters instead of going for, risking say 7% to make 14 or 21. He's maybe risking 5% to make 10 or 12.5. So he's taking parameters. That's the only thing that sort of varies there a little bit. So,
And just as a overarching rule, when you're saying the market's good or market's bad, sort of good opportunities or bad, there's sort of a few ways to look at that. And one of them I know from listening to having these conversations for years is you'll use the blueprint, which is something that Gary did a couple of weeks ago and well worth a watch and a rewatch of that video to help you know where the highs and lows are. And then also you're looking at in the context of your other traits. Am I getting a whole lot of breakouts? Are my momentum traits working or are they not? Are they failing? Are they breaking out and failing quickly? Am I getting to 2 times profit on my other trades quickly? So are they sort of two ways that you sort of keep your finger on the pulse as to whether it's a strong market or a weak market?
yeah, look, if we're below the 50-day moving average, the index, and that's a weak market. I know Mike Webster, he uses the 21-day moving average. That's his indication as to whether he should be foot on the throttle or foot off the throttle. So the 21 there. So, but it's interesting. It's sort of kind of, we should talk about this on line point. But you showed me something a couple of weeks ago, which is about the momentum scores for the stocks throughout the year, and then where the indexes was and stuff there. And this is a Manavini thing as well. Is that like Manavini, he doesn't get involved in the first part of after the market's found a low and coming out of the lows there, you might get involved for a couple of months. And you were showing me basically the momentum scores compared to where the market was. And it was amazing that some of the highest momentum scores weren't at the highs. They're actually sort of coming off like the second or third contractions. And then that next leg up off after the first or second contraction was sort of where the highest momentum scores were coming in. So the momentum scores can actually come in late here. And even, I've made this mistake over the years, is that I felt like the market, like at the moment, the market still is extended to me or top of the range, but hitting some resistance there. So my old self would be saying that I don't trade lightly here with markets peaking. But this is where momentum scores start really kicking on and operating. And then we're getting things flying. There's so many VCPs at the moment that are just going bang, whooshka. Whereas in the past, I would have thought, no, index is pretty high. It's extended here. It's kind of mid-light. But your momentum scores were sort of highlighting that. And I know Manavini has also highlighted this in the past as well, is that even though you can be in the topping phase there, that topping phase can take months. And some of those momentum scores can actually be really going through the roof there. So that's why you got to be sort of careful not to close yourself off just looking at the index itself. It can be quite deceiving. And even if the market takes something, I've missed it. That's when the best setups actually start to actually set up after it's already taken off. So it's not too late. And yeah, be careful, get too defensive too quickly. That's probably mistakes that I've made.
Well, you've given an insight into what will be a sneak peek of the next level of membership that we're just doing a couple of testing at the moment, but very close to releasing. And what you're describing there is what we call the momentum profile. And yes, just like Gary, I was completely amazed. I was expecting the best momentum to come at the very top of a market after sort of 12 or 18 months run. But the best, like 3-4 times 4 sigma or 4 standard deviations away from normal, where the best opportunities are, actually doesn't correlate with the index.
Yeah.
Well, like you said, we'll cover that in more detail. We'll share that when we're close to releasing that. But that helps identify, well, hang on, should I be leaning into these trades? Should I be taking the profits earlier? So there's a lot of fun statistics out of that. But I'll let you carry on with the charts, Garrett.
Yeah, so that author cell is obviously in the back of Misha Blast, and I don't want to jump ahead here, but I will. The Sonata CYP is another stem cell as well, and that's actually on the launch pad as well. But again, look, this is actually a big VCP here. Just had a little B-Wave break here today or a couple of days ago. All that, pretty good volume too, rallying here. Good. So again, sector strength. Sister names all strong here. Some good volume there. So just goes to show. That's why the sort of sector stuff's important there. ETN number 21 was interesting there, just because this had a pretty explosive move here. So it's had a pretty deep, had a decent pullback there, Chris, as well. Probably has stayed in the top half here so far. So saw a little bit of selling in here. So a few days selling here, a few days selling here. So, but this is probably one to keep an eye on there now, because it's obviously had that 100% move. So now we're probably going to go through a bit of congestion there. So this is just one to sort of maybe see if this whole thing can congest and tighten up and maybe set up again. So it goes on the watch list there. Now the next, I think, 23 here, actually, I think the next 5 or 6 stocks, there's a Royal Cup and Handles there. So I was just amazed to actually see these Cup and Handle set up there. Now, that the Cup and Handle is probably the one setup that I need to work on there. I find this one of the hardest setups to trade here, because I find that the normally with the handle there, it can sometimes this can be under the high, which I prefer. If it breaks to a new high, then you're breaking that 52-week high, it can do a little throwback and try and shake you out, which makes it hard to trade. But I do like the low handle like this. This is sort of, it's had a pretty good volume up here. Whole thing is rounded up. There's a bit of a VCP in here, so it does come out of here, and then it goes up near the high there, and some good volume there. But what you see here throughout this period pulls back here. There's a couple of up days in here, some volume, but the whole period they're very, very light here. So even though this whole thing's sort of congesting under the high here, you don't see any selling here, and eventually it breaks out, and it breaks a handle there. That's probably the trigger day there. I mean, all the day before. That's a bit of a tell as well when you see that, yeah. So I mean, that I don't like to cheap, but when I see a signal like that's probably a tell. So you might put, for me, I might put a quarter on of my size there, just a little, try not to, just in case I'm wrong here, but something like that's a bit of a tell to me. So
You're trading a Wyckoff anomaly with that volume, and
yeah, it's just sort of giving out a little, it's yeah. Yeah, it's like sort of see someone smiling across the toes. They think they've got a red hot hand, it's all over their face. So it's, this is it's all over the market, even that big rank, that big volume there. So it does go through. So that's an interesting sort of handle there. DYL. Now this is a less obvious one, a tougher one to trade here. So we've got, again, we've very strong trend here. It's had a bit of a pullback there. This does have a VCP in here, Chris, as well. So pullback, tighten up in here. So in theory there, I want to shoot ahead, but in Elliott wave terms there, this might be like an A, B, C, D, E, F, and then finally breaks that. So for simplicity's sake, as I just, most corrections are, most simple corrections are like 3, A, B, C. So we're looking for a break of an old high to confirm that the trend's changed there. That's what we're looking for. So whether it's a B, D, F, or J, or whatever it is, it's easy just to label a B wave, but essentially we're looking for this contraction there, lower high, and then break above it there. So, we did break above it here, then again get going. So it's actually had a nice run here, some good volume there. See how it got to the high, and a couple. We had some tightening up under the high as well, which is a bit of a David Ryan thing as well, seeing that sort of tight contraction underneath there. This might have been a bit of you might have actually bought that day there potentially. That's David Ryan would have bought something like that, because like 3 tight days under the high, then it breaks out. That's a bit of a trigger, but then it does a little throwback. This is the thing with the Cup and Handles I find difficult, is that they will do throwbacks. They will test you, the Cup and Handles, quite regularly. So does a little throwback, holds there, and then comes through again, and then really a break through, and the volume's still pretty strong. It still looks pretty positive there, but that's the harder Cup and Handle to trade. There is just that sort of smaller one there. I prefer to sort of see it pull up underneath, do a little A, B, C, because that's the most common correction. See light volume, and then come back through. But that's hard there, because that would have, it's a 52-week high there breakout, and then it does a little throwback just to, I don't know what the rules are there. I think with a couple of handles, I think they try and I think a lot of them allow themselves around about 5%. Chris, I think on the entry little throwback, they don't want to give themselves too much room. But I do find it tricky to just because you sort of, it's a trade setup there where I find you have to give yourself some room there. Yeah, so that's what makes it a little bit tricky there. You look at SSR, the next one. So we're going back to back cup and handles here, but again, we've sort of had this strong trend here, and then we get a little handle here. This whole thing just tightens up here, and it pushes up. So each congestion, tighter and tighter, the whole thing just congests underneath there. So never really, all the pullbacks are pretty light there, and eventually it breaks through. So again, it pops through the top. Again, a little throwback, and then a reversal, and then it goes on with it. That's just sort of common here to have this little throwback in there. So yeah, it's always easier to wait for the throwback. So do you wait for the first throwback? Do you wait for an ABC throwback? Yeah, it's a tricky one, like a cup and handle. That's why it can be some really good setups here. Some of those, if you go through those model books, you'll see cup and handles littered through those sort of strongest names. But trading the cup and handle is the tricky. That's the, there's definitely an art form in trading the cup and handles, and I'm still sort of trying to work it out, trying to give myself room. I just don't like giving myself too much room. It's sort of, I'm okay to lose. I just don't like losing a lot. So I prefer, if I'm going to be losing, I like it to be tight. So that's why I find the cup and handle, it's one of those sort of trade setups there. I find that you have to give yourself a bit more room, Chris. And that's probably the thing that I'm most uncomfortable with that setup there, is giving myself room here. So what I prefer to see is this setup here. So this triple T is obviously ring running here. It's had a nice run, new high there. It does pull back. Again, this does tighten up here. Another VCP does have a B-Wave break here. Breaks a lower high in here, and then resumes the trend there. So we see some good volume here now. What it does, it goes back to the old high. So this is the one that I look for, is I want to see a throwback, a little A, B, C, and I want to see light volume. So you see how heavy the volume is there? 1, 2, 3 bars there. Yeah, see light volume. Even the rallies light volume. See a little bit more, but no follow through, and then bang here, like this day here. It's already didn't take much volume here to push this thing right back up again. So it's showing strength there, and then it comes through the other side here. So I'm looking for that's the sort of the low risk entry that I've noticed. That's the one that I'm most comfortable with, is then if I see that little ABC in here, then I can sort of enter and give a pretty tight stop there. Maybe allow myself maybe 2 or 3% rather than a 5 or a 7. And then we're coming through there, and then maybe where we see signs of positivity, then we add to it as well. So, maybe you try and get, a little starting parcel there, maybe buy a quarter, first day up, good volume, buy another quarter, maybe buy half, and then get once it breaks through the handle, by the last bit here, and then you've sort of got an average sort of somewhere in here. Then you can then you sort of give yourself a reasonable sort of stop. Not too much room. So again, just keeping the risk low. It's just really important for me. My trading personally is all about low risk. Okay, so it's just if I can't get a low risk setup, I'm not going to trade it. So, but I think really that that CUE is another. This is another sort of cup and handle in here in a way. It's sort of gone back up here and just a bit lighter here, this one here. But again, the stock has showed a bit of strength there. If you look at the weekly there, it's had that reasonably strong there. And the whole thing there is, it's like a lower handle here, but is showing here. So it doesn't look too bad as well. But see that, cup and handle, I find one of the trickiest setups there personally. But I look for that little three-way pullback. I think Newix did a nice handle there, did a little three-way pullback, and then just kept going there. So that's why sort of the cup and handles, very predominantly seen in all the strongest stocks, but it is hardest there because you see that it's going to try and get a little pullback for you. It's going to entice you to trade it. Then it's going to do a little throwback, try and shake you out, and then go on with it. So you'll you'll buy the break and then you'll get it, it'll pull back, you'll get shaken out and then come back on again here. You know, I mean, sort of, there's one here I'm watching at the moment there, which is SHV. Now this is sort of like, you know, the weekly there has just come out of the top here. So it's a big 52-week high, come out of a VCP as well. Done a little bit of a nice little handle in here, but it's now sort of sitting on top of the old high as well. So it's a little tricky there to try and, you know, can this sort of sit on top of this old high here and stay here. So it's had a little, I thought it was going to have a little ABC, come back down to here, suddenly sit on top of the old high, but it just did come down here. So it makes it tricky to trade these handles.
Can be quite tricky. You can see on the chart there, it's erratic and actually depth and big moves.
But it's interesting there because this one's sort of like that's coming out of a pretty decent sort of size, you know, move here. It's had some pretty good volume behind it as well. So there was very little selling on the pullback as well. So it's just sort of one here. But again, it's in that commodity space too. If you get the cost of everything, I mean, you saw last week, Chris, the highest gold price ever, highest coffee price ever. You know, commodities is sort of, you know, that's the one thing with sort of high inflation and buoyancy. You see commodities can get pretty rampant. You know, so you know, trade wars, they're just going to add to commodity, you know, prices and pressures there. So, yeah, I mean, food's probably not been the best trading area in the past. If a hard commodity areas, the metals is probably, yeah, just an easier one there. But this one's pretty interesting there. Just say you come through the 12-month high here. This breaks. So far, I haven't seen this selling here. So that's what I find interesting.
Well, using that 10-day moving average on that chart, or you can see the 50-day on this one here. It looks like a BCP in itself. Just
so
red lines contracting.
Yeah, so I mean, look at that. So it's been 1 day here, which was kind of the low. So that's the only day there's been no volume through here. It's been, you know, very, very likely so far. So yeah, it's an interesting one here. That one's sort of interesting zone there. So that's our quarterly momentum there, Chris. That's the it's an interesting list. The cup and handles just everywhere in there, which is something you've seen all the strongest names. There's definitely something I've been trying to build my library up with cup and handles there, but I do find it the hardest there because I mean the VCPs are, you know, you wait for that B-Wave break. It's simple. You know, you buy the break of it. You put your stop in wherever you put stop in, and then you trade some, you know, whether it's 2 or 2.5 times your risk, and then let the rest run. It's just you know, I love it because it's an easy process to sort of to follow. I get why many Benny likes it because it's just the parameters of that themselves. You just follow, you know, if the setup's there, you just take it and you follow the same process every time. You take some off, you take it off at X amount of risk, and then you backstop at the even, and then you let the rest run, and then once it crosses the moving average, you're out. Just, you know, simple. But the cup and handle is a little bit trickier. But the problem with the cup and handle is that we're seeing here that is prominent on so many of the strongest names.
Oh, we're not just talking the last 5 years. Yeah, we're talking about years plus.
Yeah. Yeah, cup and handle is just rife through the strongest names on the board. So that's why we got to learn that setup a bit better. But I love to see it, you know, pull back in a little 3-wave manner and light volume. That's the sort of simple one, but it doesn't always give you the simple one. So.
And just before we leave the momentum leaders that are the strongest right now, there were 2 other requests that that you haven't covered. So one of them was Mesoblast, MSB, which you have mentioned, but just some of the members were wondering about how does that look on the trade side of things and analyzing the chart. What do you see when you look at this chart?
So strong trend here. That's the largest correction of the move so far. So possible overbalance of the trend. And then we've gone back up. So, I mean, you know, it's simple. Like you just count how many days has it gone down. So 1, 2, 3, 4, 5, 6 days down. Now we're what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days here. So more than twice as many days up. We can't get to a new high. So normally, like McLaren would sort of say, if we pull back 3 or 4 days, we must go to a new high in the same amount of time. That's a strong trend. So if it takes twice as long to go back and retest the high, that's not a sign of strength. So So that's not a good sign that it's taken twice as many days. We can't break the high out. That's a sign of weakness there. But this just might mean this might congest here. So maybe this goes through a consolidation patch like this. So we've got our high look, pull back, retest, come back, congest. So this might be in a congestion phase for a while here. So definitely a stock to be watching there. I really like the sector. We've seen other sister companies all show strength as well here. This one's been a leader, so it's probably now in consolidation mode. So to me, it just goes on the radar, but this could be a no trade zone for 2 weeks, 2 months, or 4 months. It just could be just, you just got to wait now for wait for a setup here. So
this chart here just reminds me of lithium 2021, 2022 for anyone trading it on the ASX at the time. The sister companies that you're talking about, Gary, so MSB's broken out and rallied. And what I would have thought before analysing it is that all the sister companies would break out at the same time. But Lithia showed us that there were 12 VCPs that broke out, and it took over 3 months from the first one breaking out to the last one breaking out. It's exactly what you're saying. You keep it on the list and you keep watching because they break out, they reload, they break out, all while that sector and theme has still got a lot of interest. So
yeah, so the second ones I find the tricky old route here, Chris. The first week, obviously, you get those lithium and you get the stronger names, and the second week, you still get some good setups in there. The third week, then you're probably getting the week of the laggards in there as well. So you got to be careful about trading those sort of third tier setups there. So you really got to you don't say you can't trade them.
they're more prone to news or negative news. That's stop the foundations or fundamentals going into it.
That's right. There's a reason why they're lagging there, because there could be some issues behind them, and even though they might get involved in the rally there, like they're the ones that can have the shocks there as well. So, like that's why all the great traders basically talk about following the leaders.
And just the last one, Drop Suite DSE. I think that one's going to be hard to analyze, but it was a request. I think it's a different type of trading, right? It's sort of a
pretty sure it's under
trading. Yeah.
Pretty sure it's under takeover in it. So yeah,
a good step from going into it, definitely.
Yeah, no, it's fun actually. Did actually one that did come through Novus actually this 1 years ago. It's sort of it was a pretty small company that started off there. Sort of I was sort of worried whether to get some traction and be big enough there, but the CEO's been very transparent. It's been worked pretty hard to get it where it's got there. So yeah, done very well.
So we've got a very solid insight into the momentum leaders on the market. You've covered the B-Wave, which could be a D, F, J, whatever that might end up being, but explained how to use it. The cup and handles, how they're key to some of the best performers and most of the best performers in the last 50 years, but they're a little bit harder to trade than VCPs. Just quickly on the themes in the launchpad, you did say that you saw a lot of minerals in there, a lot of mining companies that that's showing up. I'll just quickly share some of the summary of the numbers because we do know a fair few members and listers like to know what's showing up. Looking beyond the top 30 that's shared with members and going to the top 200 companies, we then look at the top 200 companies launchpad and then try and identify the best themes. Like Gary said, a lot of gold explorers in there, 35 of them. We've got Western Australian miners, 33. We've got iron ore in there. We've got battery-related miners. We've got 13 lithium. We've got 17 American miners. So we don't need to go into the whole Trump news side of things, but that one seems pretty obvious. And then we also have 9 silver, 5 cobalt, 7 zinc, and then European miners, we've got 6 of those, which actually rank 3rd on the launchpad. And then graphite's ranking 1st as a top theme with 5 constituents. With that lead in, Gary, you mentioned minerals in the launchpad. What are you saying? Which charts do you like?
Yeah. So I'm just, as we're talking, I'm just noticing another little cup and handle here, mate. On this one here, it's like, it's just rife from the strongest names. You just said all the time there. But I was just gonna there was a lot of questions, Chris, around that around the B-Wave there. I did sort of touch on it there quickly there, but essentially like the Elliott wave theory basically suggests that every sort of rally there's a 5-wave structure. There's usually like there's a longer wave there, like an impulsive wave, which is usually the 3rd wave, and then the 2 the two pullbacks, the wave 2 and the wave 4, one's simple, one's corrective. But the thing I like about Elliott Wave, if we just, I'd encourage people to go out and read Elliott Wave, the theory and stuff there. But the thing that I noticed there, like it's like the waves always, you can be relabeling a lot of the time. It's sort of, it's just because you can have sort of 5 waves within a wave, and then you can be often sort of, relabeling or adjusting, and this is an extension and all the rest of it. But the one thing it doesn't change with Elliott Wave is that the most common pullback is for a little 3-way pullback, like an A, B, C. So you can see here, I've gone back to when at 360 early days there. So so the A leg down, a B and a C. C in the pullback in here, we've got an A, B, C. Again, we've got a little A, B, C flat up here. We just, even the larger pullbacks as well can be an A, a B, a C, and then we break through again. We just see these A, B, Cs, these A expanded flat here, A, B, C.
Should I sing there for a second?
See them everywhere.
I'll use that chart on the left for those who are very new to Elliott Wave and ABC. The one on the far left, so mid-April, you've got a high, and then you come down to the low in late April. That's the A leg.
Yeah.
When you create that low from the late April, where the A is, up to the B, that creates the B leg in late May, and then that high from late May to the low in mid-June, that creates a C leg. So is that a fair summary of the A, the B, the C? We're going from a high to a low and then back up to the next high.
Yeah, so most rallies there, like this is sort of like, you think about it as a 1, 2, 3. So it's like you have a simple correction, then you have a complex correction. It's as simple as in just a normal pullback. The complex correction is sort of something which is more of can be longer or square sort of correction. And then you have a 5th wave as well. Usually your 5th waves are sort of the shortest, or can be the shorter wave there. Normally the 3rd wave, like the 3rd wave can't be the shortest wave, and it's often the longest. So look, there's lots of different applications there. It's worth learning these things. The market does look at it. But to me, the most powerful thing that I've found with Elliott Wave is that, the most common correction. So if you just put Elliott Wave aside, the safest place to enter a trade is to wait for a little 3-way pullback, a little A, B, C. And even the congestion there, it's just to wait for I refer to it as a B-Wave. I wait for the market to have a breather, congest there. It can be an A, B, C, or it can be A, B, C, D, E, or an A, B, C, D, E, F. It can go a lot longer. It can be quite a few more waves in there. As soon as we come through as soon as we break a swing high in there, I personally refer to that as a B-Wave break. That's just the way I label it. I'm looking for a congestion, and I'm looking for it to break above a swing high. So it could be a B or a D or an F, really. That's probably in terms of Elliott Wave terms, that's probably the way it should be referred to. But for simplicity purposes for my trading there, I'm just looking for it to break swing highs. You can see here, there's even this pullback there does an A, B, C, but then it tightens up again in here, and then it eventually breaks this lower high. So it'll eventually break out and move higher there. And but just understanding that that's what I refer to as a B-Wave break, just breaking the high. It's not perfectly correct in terms of Elliott Wave terms, but if you look at all the corrections at a time here, you'll just see these ABCs, even expanded flat as well, or maybe A, B, C in here as well. Yeah, and sometimes they're small, other times they can be quite large as well. I mean, this is like an ABC flat. You get a marginal new low here, and then that's typically how a 4th wave does. So like one of my trade rules is to sort of look for these stronger trends, the false break in the top half. And then, that's in Elliott Wave terms, that's typically a 4th wave and looking for a new high there. So that's when you can get the 5th wave could be fast, get a new high there. So that's the type of setup. So just understanding these theories is pretty interesting. But the one thing with that you'll see constantly over and over again, it's just these 3-wave corrections. You just see them everywhere. I mean, that is an A, B, C in there. and the whole thing tightens up and eventually breaks a lower high. So even though the B wave's up here, I'm not looking to sort of wait for it to break above here. I'm waiting for this thing to sort of lower high. So even though this is the B here, I refer to this as a B wave. As soon as it sort of breaks above the swing high, it comes in. And if you're using trend lines to sort of break those trends as well, it is supportive of that. So, but again, you just keep seeing these ABCs everywhere. There's just constantly, it's the safest place to enter a trade after a strong run is to wait for a 3-wave ABC. So that's why I'm looking for that, so I hope that sort of clarifies this. It's technically not correct every time because the B wave could be a D or an F, but I'm really looking for a swing high to be broken there. And if we look at the first stock in that, on the launch pad, WA1, so the number one stock here, it's done exactly this, Chris, as well. So this has had a big, if you look at the weekly chart, it's gone up really strongly there. This has been a strong trend here. This has gone through a contraction here as well. This is a big, A, B, C, D. Doesn't go to a new low here, but you can say that's an E, F, G, maybe H. So Elliott Wave might put a lot more labels on it there, but what it hasn't done is sort of broken, we're waiting for this thing to eventually break, swing high here, tighten up here. So we did have one in here. I thought this was the move there. I actually traded this one. Had an okay move. I think I sold some of the heat, pulled back, got stopped out the rest. This has done something similar here. I was watching this one the other day. It did break through there a few days ago. Look at the volume. So that's what I mean. It's come through, broken there, at swing high there. So again, it's technically not a B-wave break here. It's probably a G or a H, or a lot further down here. But for simplicity purposes, we're looking for that the whole thing to go through a corrective sort of sideways. That and McLaren would sort of talk about impulsive, like an impulsive going straight up and then going sideways is like a corrective trend, and then we're looking to break out of a corrective trend as well. So eventually we sort of break out. There's certain ways of breaking out here, but we shouldn't be looking at because sometimes these things can trend down for a long time here, and we're trying to jump in early here. We want to see a break of the B wave there. So breaking above this high, breaking above this high here, good signs there. Maybe breaking another one as well. So I mean, add a little bit here, add a little bit on the next break, add another little bit on this break here. So, so it's all about risk reward there. But that's what typically they do. They come out of these B-wave breaks. You can see one here. Lewis, it doesn't look back here. I mean, there's been, if you think about, I think WiseTech done a little B-wave break recently. Just trying to think. I mean, even a stock like Harvey Norman did, it's gone sideways the other day, breaks a little B-wave break in here, does another break here, has just gone straight up here. So we've seen a lot of the big cats actually do these VCPs as well. That's hopefully I explain the B-wave there. So I'm just looking for the whole thing to sort of show some sort of strength, go through a bit of a sideways motion there, like a congestion period, and then break through like a swing high there. And that's what I refer to as a B-wave break. Okay, so this IPG there, possible change in character for this one here, had a deeper correction there. We could label this as maybe this is a B-wave breakdown here or maybe lower here, but I think it's more important sometimes to sort of, you want to see this is a bit weak. It's under the 50, so it's not really showing strength there. So one of the classifications I look for is I like to see the stock above the 50. I like to sort of see it stay in the top half of the chart with it, daily, weekly shows strength. This is probably not doing that. Still pretty light volume as well through here, so it's going okay here. Well, this is the market at the moment. Everything is breaking out, Chris, and just taking off, going really, really quick, really fast. So, which is good from a trading point of view. But it's it's probably not the best one that I'd looked at there. DXB was again, this is probably something I would look at there. So that's obviously already showed the strength there on the daily and the weekly. So it stayed in the top half of the chart here. So it pulled back here, had a contraction there, eventually it breaks a B-wave breakdown here. You see once they break through these levels, Chris, you just see the money just, people looking at those sort of, it's like a congestion period, and all of a sudden it breaks out. So, yeah, just things to work on. This has gone through had a nice move here. It's taking out a few swing highs. It's now sort of contracting again. So to me, it just kind of goes on the watch list there. See if it can't contract a little bit. LM8. This is okay, this one here. It's sort of definitely got a VCP in here, but we are under the 50, and we're just starting to break over the 50. It's not my preferred one there, just because it has come back probably below the midpoint of the chart. But yeah, it is a VCP in here tightening up. We have had a little bit of a B-Wave break in here, maybe, we've broken a swing high in here in terms of that. But I haven't seen some maybe 1 or 2 volume days here, not too much. But so it's okay, but it's not, I prefer to see them showing a bit more strength than that. Look, if they zoom out to our weekly, there's a lot of losers in front of us there. That's probably not ideal. When this has been at 130 here, so there's plenty of losers in front of us there. So anytime it rallies there, it's going to draw some sort of selling in. So, we're still sort of sitting under the 50, so it's just not the strongest VCP there. SS1 is interesting. Obviously, this is sort of silver. Obviously, sector strength was hot. Again, it's come back, maybe A, B, C. This rally here is a little flat so far. So let's see how it's sort of struggling to get going. Did break a little bit of a B-Wave here the other day, but it's just not in the strongest position so far. It's been, this has come out pretty slow here. So yeah, that's probably a B-Wave break the other day, but not the strongest one. So not the best signal to me, but in a sector that is strong here, but that a lot of those gold names are looking very extended, Chris. So, I probably would be looking to add to those positions. I'd just be managing my existing ones. Yeah. What else we got there? I think USL was another on the list there. So I had a question mark there. Again, in the lower half, yeah, maybe breaking out a little bit, breaking a swing high there. But last correction was a little deep for mine. You prefer to sort of see it stock go up pretty strongly and then correct sideways in the top half before it comes to. You can sort of see how this has been strong here. The whole thing goes sideways and then it comes out. This has had a really deep correction here. So that's impulsive sell-off there is the last thing on the chart there. So that's not ideal. SL, GQG. Again, this has had a pretty deep sell-off as well there, Chris. The only thing is so far, this has rallied in an impulsive manner. So it's had a really sharp rally here, but I'd want to sort of see this pull back and then congest there. I'd want to sort of see like some sort of high type flag or some sort of sideways orientation there. Hasn't had red hot volume in there either. This is a pretty deep trend here. So, it's not awesome there. Zoom out to my weekly, even that sort of shows it's sort of breaking below the, maybe coming below the midpoint. Some pretty heavy selling through here. Look at those sort of selling days in there as well. So pretty aggressive selling through there as well. So, again, we sort of got to make a judgment there. We really want to be looking for the strongest names there. That's probably not showing super strength there. CHN is sort of interesting there. This is one of the names this one I sort of thought the setup was pretty interesting a couple of weeks ago. But again, if you zoom out, problem with this trade here, I don't mind it here, but that's the big problem is that, there's so many. I mean, we've got someone's bought this at $10. Someone's bought this at, $8. And anyone who's bought this in the last 18 months is underwater. So, you're up, anytime a rally's here, we've got 18 months of buyers there to tolerate them. We've probably got 2.5 years of buyers there to sort of compete against. So they're looking to get out on any sort of rally there. So it's just going to be tough for this one to get going. It's showing some potential there. It's got some okay volume on the way up, pull back. To see how that pullback is that's coming right back into the range. It's not going up and staying tight. It's coming all the way back here. You want to see it go up. You want to see it struggle to come down. That's what we mean by relative strength there. We want to see it move easily going up and then struggle to go down or use up a lot of time and not really coming back there. PDI was sort of one that we mentioned previously. We'll see that up and handle underneath. OPZ, thought this was a bit choppy there, but it still looks okay. It's a little erratic from time to time, but yeah, so that's sort of one that, something like that, I probably wouldn't trade it just because it's too erratic there. If I did trade it, I'd be probably trading it a bit smaller. NUF I thought was interesting there. Just, again, coming off a low base here as well. It's a bit negative there. You are starting to see some shoots coming through there. We've broken above the swing high here, so we're starting to build here, but not really that exciting to me. I do think commodities could do quite well, but it just goes to show the ag stuff is not the strongest sort of sector there. It's sort of, possible change of character here, but to me, it's a no-go there just because we're sort of coming up a low base. Look, you'll find here is if something like this is going to have a good move, it's going to build a base first, Chris. It's going to maybe use up months and actually, I wouldn't look at this until I saw that 0, 1, 2, 3, until I saw 3 higher lows established there. And at the moment, we've only got a 0 and maybe a 1. So we haven't even got a second or a third high low here yet. So I would be looking at till I saw something a bit more. CYP we spoke about there, looking pretty promising there. I mean, that's a nice little setup there. It's a big VCP on the daily there. I think the weekly is interesting as well. Got a lot of losers there, but the one thing I've seen is saw big change of hands down here at the low, and then we've seen, look how heavy that, there's been heavy accumulation through here as well. So, and then we've seen even heavier now as well. So this is actually, that's really, really encouraging sort of signs there. So now it's a pretty interesting company there. It's actually got, in that stem cell there, it's actually got some sort of tech which is a little bit individual to itself. And it's also got a processing use. I remember that, this is one of the first trades there I probably made some big money on, Chris. I was trying to work back the other day. I'm pretty sure I had the stock here back in 14, 15. It was one of the first big wins I ever had trading sort of smaller stocks out. I had a big, I think this thing went crazy, and I traded some at 85, like 95, 105. I think I might have sold the last lot at 120. And it kept going higher. But yeah, so what was but look at that. That's like, went to 120, came all the way back down to 20, 30 cents. I know plenty of people who didn't want to sell into this heat, saw it all the way come back again, and probably hold on to it as well. It's come up here. So that's had a potential for a while. This stock's got some interesting tech, but like you've got to, I don't know. I think you got to sell some of these sort of heated moves there, Chris, because sort of that's we're talking about 14 and then 19 and then 25 here. So talking 4 or 5 years apart here between drinks there. So, yeah. But that looks pretty interesting to me. That's definitely one that's showing some interest there. We're doing some homework on that one. SVL Silver Mines there. Look, again, it's in that sector which is showing strength there, but that stock is not showing particular strength there really compared to everything else in there. So it's a bit of a laggard overall. I think VYS was the last one there. So this is a good sort of setup here, because this is, it's had a really strong trend, impulsive there. Had this big brain today, but obviously we saw a massive recovery there. As soon as that did have that, what do they call it? Sort of, like you're pushing a ball underwater and then the whole thing pops. When you see that sign,
Ball underwater,
yeah. So that's often a bit of a trade. When you see that, if we get sort of solid off, the whole thing just pops straight there. Shows you that the stock's got a bit of strength there. So it's a pretty strong trend. So that's a pretty strong reversal there. You don't like to sort of see stock get sold off like that. It's covered pretty much straight away. So good thing about this is the whole thing just tightened up here. So to me, there's the lower high there. what's that, 41.5, and then it pulled back here. So we can see through here, it all lightened up, volume very, very light here. Didn't break 41.5 until this day here. We saw a bit more volume there as well. So I don't know if I can zoom into that. So, man.
So just zooming in to see the B-Wave and whether you would have traded it.
Yeah. So this is broken out here. So obviously we've seen stocks had been a leader, been shown relative strength versus market, had that big sort of sell off there, but big recovery. So shows the propensity to bounce there. But then the whole thing tightens up again. So okay, it's already showing strength there. It's recovered here. Whole thing's tightened up here. We wait for a bit of a break here, and then eventually it breaks there. So this day here does break out. It's probably one of the heavier days in there. Not the heaviest, but it does go above, that level. And then the next day, that does pop here. So not the first day out doesn't finish with strength there. So probably wouldn't be super confident there, even though we might have bought this on a break of, for me, say 41.5, you might buy it up to say 42, 42.5. But then the whole thing's gone there. And the beautiful thing about that is if you did buy that at say 42.5, something like that, there's the last little swing there. There's say 39.75. So you could probably put a stop at say 39.5. So you're saying you're buying at 42, stops 39.5. That's a pretty tight stop there. If you want to give yourself a bit more room, some traders don't like to be that tight. I'm a tight. I like to lose small, so I'll be pretty tight there. But someone like I say 38.5, they want to see the break below this, to give themselves plenty of room there as well. And then so what I mean, say the entry was say 42 with a stop of say 39. So that's say that's 3 cents, Chris. What the pros will do is they'll trade a multiple of that 3 cents. So if they say they put a trade on and the risk was say $2,000 for that 3 cents. Then as soon as they make, say 2 times or 2.5 times, as soon as they make say $4,000 and say 4.5 or say $5,000, they'll take some of the trade off, and then they'll move their stop up to break even or near break even. I know some people say, like to me personally, what I would do is soon as I made, if I was risking 3 cents, soon as I made say 6 or 7.5 cents, so 2.5 times, I would take some off, and I would take half off. And then I backstop the rest to even. So I've literally, worst case scenario, I'm going home with a small profit. If it keeps going, then fantastic. If it doesn't, then I go home with, I bank some profits regardless there. But then now I'm either using the 10 or the 20-day moving average as my stop, and then trying to stay with it. So far it's had a pretty good pop there. Got to near the high there. I mean, to me personally, if I saw it go near the high, I'd be thinking, well, if we got near 51 there, if there was a raging bull market there, and say I only took a third off, if I saw a pop up to a new high there, maybe I'd take another third off up into that extreme sort of pop, and then I just backstop the rest there as well. But at the moment, I don't view this as the strongest market. I'm a little bit concerned about the where the index is, but I know that all the momentum plays they're all running, so just got to run with them. But I'm 50-50 currently. I'm taking 50% off on 2 to 2.5 times, and I'm trying to backstop myself to even or pretty close to evens, straight away. So I just don't want to take. I don't go home to loser. If I get a nice move, if I've had a move, say 2.5 times my profit, I should never go home a loser. I should be a break even at least. I should try and take some off. In the old days, I used to be -1, 0, +1, or +3. That was it. So I used to program the -1, +3, and then as soon as I achieved 1 unit of profit, I'd go from -1 to 0. As soon as I achieved 2 units of profit, I'd move my stop to +1, and I'd either get hit out at +3 or +1. And I found over time, a third was -1, third of my trades was zero. So 2/3 of my trades I don't make any money at. With the 1/3, I was getting a mix of +1, +3 at fairly even distribution. So I ended up with a net +2. So ends up with, say, a third of my trades are -1, a third at even, and a third end up +2. So I get a winning system. Okay. Now you can look at that as saying, gee, mentally I can't cope with that because I'm not making money on 2/3 of my trades. But we can look at it another point of view is that 2/3 of the time you're getting at least one unit. Yeah, you're getting the direction right. Initially, you're getting more than 1 unit of profit. So it's moving in your the direction you think 2/3 of the time. So that's the positive output. So it doesn't really matter what you need to substantiate your brain or your feelings or your emotions there. What matters is more having a system which is kind of ticking over, making money. So you've got to put that aside there. You really want to have do the maths there, process there. That's the thing about all the best traders have already got a bit of a system they use. So I'd sort of be trying to take some of the emotionality out of it as to what you do each time. I'd be trying to kind of lock in a process as to how you're going to trade. Have a
native way of
If you're watching that sort of Jack Casellas there, I think he's risky. He sort of trades there. I think he was risking $1,000 like every trade. He just trade the trades in. He would be banking some and then lighting some. So each trade there would be like, either lose 1,000 or he'd be banking maybe 2. But what it showed was that each trade was someone went harder. He had a bigger win. Someone he had a losing series and then he had a mild series. But you just see the account ticking away over time. They're just taking the same setups. It's just kind of it's interesting. So it's just it's a bit of maths there, but you've got to, if you're serious about your trading there, we've got to break it down into that sort of, into that mode, that process there. And as traders there, we've got to do what's good for our welfare as well. So, by banking some wins early, it takes the pressure off, particularly if to me, I'm scaling up to 20% potentially position size, unless the market's in a weak position, I only have a limit of say 10%. So yeah, if I've got 20% in a single position, that's pretty, and some risk with that. But if my stop is nice and tight, I'm only risking 1% of my capital. That's all fine as well. So it's all about what you're risking. But yeah, it is important. Once you take a little bit off, you can kind of relax there. So I know my sort of trading reviews, I do a lot of review and a lot of the first 3 or 4 days of the trade, I'm very attentive to it. And then after day 4 or 5, I can kind of not switch off, but I'm less attentive to the trade because hopefully by the day 3 or 4, I've traded some into heat and I've backstopped myself to even. And then, so I've got a few trades on the moment that I've already banked 2.5 times my risk, and I've already got my stop at break even or slightly above. And then I'm not watching them as closely. I don't need to. I'll just let it, I've got my stop there. Keep getting those trades on there. Hopefully, it's weird. I want to keep overriding them. It looks a bit weak, every day I'll just, hold on. But I will say that I've already taken some money off. I just got to let the moving average, it'll cross the moving average. I just got to keep, as that moving average goes up rather than doing it every day, it might be every second or third day, I might move it up. If it keeps moving up, I'll move the moving average up, maybe 1 or 2 cents or, keep edging it up higher. So if it keeps going higher, your moving average just keeps getting higher. So the gain, even if the market moves against you, you'll, the longer you're in the trade there, hopefully it keeps moving up. The higher that moving average is and the higher the profit will be eventually on it. So, just get the process right. That's the key there. Try and take the emotionality out of it.
Well, it's a lot that you've shared today. You've shared sort of trade management, trade entry. You've talked about the momentum profile and the importance of themes. So we'll ask those who are watching and carried through to the end, thank you very much. Leave us a comment below as to which parts of the video you find most helpful so we know where to pay our attention in future. Trade management, trade entry, the momentum profile that Gary was talking about, when it's hot and cold and good times for momentum traders, or things like how strong the themes are. So that'd be really useful feedback for us. Also,
Oh yeah, it was great. It was great getting feedback there on the B-Wave stuff, because I otherwise,
we just keep talking about it.
yeah, you know, lose people. So yeah, so if you've got questions there or something you want us to cover in detail, yeah, definitely reach out, put some comments on the website there, and see what we can do.
Lovely. Well, comments, likes, share the video if you wish, join and subscribe. And to that end, we say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.